Today was a pretty scary day in the stock market, not gonna lie. Take a look. The Dow Jones Industrial Average actually went up 289 points today, which makes sense. They're not very tech heavy. But take a look at this. The NASDAQ, which is very tech heavy, went down 612 points or 3%. And the big reason for the sell-off today is that China has developed their own AI software called DeepSeek, which absolutely crushed NVIDIA. The stock lost over $600 billion of their market cap today. This, of course, has everyone freaked out, as NVIDIA is the world's second largest company next to Apple, and right behind them is Microsoft. But don't forget that we also have a lot of corporate earnings this week, and the Federal Reserve is talking on Wednesday about the interest rate hike, and this has investors nervous. Plus, we had an almost trade war with Colombia last night that was also resolved last night. The thing is, Wall Street doesn't like uncertainty, and this has a lot of new investors absolutely terrified. You know how I know? Because I have 370,000 followers on TikTok, 185,000 followers on Instagram, and I have gotten dozens and dozens and dozens of DMs today saying, what do I do? What do I do? I just started investing a week ago. I just started investing yesterday. I just started investing 2 months ago. And my portfolio's down already. I'm sitting on losses. Help, help. I make a lot of videos here on TikTok. I've been on this app for over 6 years, but I think the most important videos that I make are the ones in times like this, where everyone is on edge, to say, hey, relax, everything will be fine. Do you know what I did today? I bought a little bit more NVIDIA. I don't believe that the second largest company in the world is just going to go, well, that's it, we're cooked. What I think will happen is that this will spur on this AI race, and other companies will start throwing more money into this in sort of like a AI race to the top. But for most casual investors, this is no big deal. This is something that in 5, 10, 15 years from now, we won't even remember. So why worry about it today? As long as you are investing in high quality ETFs predominantly, which is what is best for most new investors, you're good. You're good. This is no big deal. It is a big deal right now because social media, the news, everyone wants ratings, everyone wants views and engagement and clicks. But I'm here to tell you that this will all be fine. Now, you have all the reason in the world to be short-term nervous if your only investment is NVIDIA or technology stocks. If you just started investing 2 months ago and you're on social media and everyone's like, this stock is hot, this stock is hot, this stock is hot, and you're like, I'll just copy these strangers, then yeah, you could be a little bit nervous now. But if you've been following me, you know we talk about the foundation first. It's most important. We talk about the 3-fund approach a lot, and they're all up here. 1 S&P 500 ETF, 1 technology ETF, and 1 dividend ETF. These are the kinds of investments that you invest in all the time. This isn't, should I invest now? Should I wait? What if I wait a couple months? Maybe I'll do it next year. No. S&P 500 tech dividends are all the time investments. Every month, a little bit more. Whatever you can afford. If it's $500 a month, if it's $50 a month, whatever you can do. The benefit of a diversified portfolio, and the reason that I'm not freaking out today, hold on, let's take a look at this. While all the big tech stocks are down, Johnson & Johnson is up 4%. Procter & Gamble is up 3.38%. Even something really boring like Coca-Cola is up 3%. This is because in times of uncertainty, investors seek safer investments, which for some could be bonds, and for others could be high-quality dividend companies and what are called consumer staples or consumer defensive companies like Johnson & Johnson, Coca-Cola, Procter & Gamble, other stuff like cleaning supplies, paper towels, stuff that you use all the time. These are more insulating for your portfolio. So if you're diversified, and if you've got, sure, you got some NVIDIA, and yeah, maybe you have a little bit of SoundHound, and yeah, you have an S&P 500 index fund, and you have a dividend fund, and you have a tech fund. But if you also have some consumer staples or consumer defensive ETFs, let me just show you one right now. Take a look at this guy. This is XLP, the Consumer Staples ETF, and look at that, up 2.71% today. And if you click right here on their holdings, it'll show you what their holdings are. And look at this, consumer defensive, 99%. And it's stuff like Costco, Walmart, Procter & Gamble, Coca-Cola, Pepsi, Philip Morris, Colgate, Altria, Mondelez, I think they make Oreos, and even Target. But if you look at the semiconductor ETF, it's down 9% today. Yikes. All this means is that you need to be diversified, not only in times that are more turbulent and scary, but all the time. All the time. Diversified portfolio all the time. That way, when you see a day like this, you go, yikes. Oh, well. You don't see a day like this and go, oh my God, what's going to happen? It's all over. What did I do? You're calm because you're diversified. All right. Smash that follow. Relax. Everything's going to be fine. We'll do some deep breathing. Don't worry about this. Don't worry about this. You don't want to panic sell into times of uncertainty. You just calm down and remind yourself that this is why we're diversified. All right. It's okay. It's going to be okay.